What's up guys, this is Loma, and today we're going to be talking about swing trading versus scalp trading. It's a dilemma that every new trader eventually experiences. Which trading style should you go for? Which one is more lucrative? Which one is better for your development as a trader? We'll talk all about that and more. But before we get started, please subscribe to this channel if you haven't already. It helps a lot with the algorithms and it lets me know that you guys actually want certain content, right? Speaking of content, please comment below what type of videos you guys would prefer, just because I have no idea what you guys want. So I'm just throwing out random things that I think is beneficial, but who knows, right? Maybe you guys have better ideas than I do. So leave it in the comments and let's get started. First, we'll start by defining what a swing trade is. So a swing trade, if you don't already know, it's just a longer time frame trade. That means you're looking at time frames maybe on the 3-day or the weekly, right? And I'm gonna go ahead and type this up right here. So first, swing trades are defined as longer term trades, right? So think 3-day maybe to like 2 weeks. Who benefits the most from swing trades? There's actually two participants that I believe benefit the most from swing trading, and that's one is people who are not full-time traders. So people who might be a full-time parent and maybe they trade on the side, or they have a little trading hobby, or maybe they just want to throw some money and then check back in about a month or 2 months. Those people would be much better suited for swing trading, where their primary objective isn't to wake up in the morning, look at the chart, have their daily routine, make sure that they're looking at prices every hour, reading up on every catalyst. So those people should not be swing trading. The people who should be swing trading are absolutely the people who have limited time to spend in the market. The other participant are larger market participants. And this might sound counterintuitive because it's like, oh, but you just said people who don't really have the time or maybe the care to spend every day looking at the charts. Well, think about it like this. If you're trading on lower time frames, it's very difficult to build meaningful size on your positions. But if you're trading on a longer time frame, you're able to accumulate what appears to not be very long, but this is 2 months or almost 2 months of price action. So you're able to accumulate larger size positions, which in turn give you meaningful returns despite prices moving maybe only, oh well, I guess that's a significant chunk, 46%. But you get what I'm saying, where larger market participants might not be able to get any meaningful size on low time frames, but on these higher time frame swings, they might be able to rack up some great size. Now let's move into what scalping is, right? This is the more difficult one to explain to people because a lot of people think they're scalping, but they're not scalping. And let me explain. Scalping is typically an intraday trade, right? So does that mean it's the hourly? Maybe, maybe not. Typically, scalping in its traditional sense are trades where you're in and out. You're almost like you're just walking through the entrance and then you're walking straight to the back of the store and you're exiting. So the moment that you enter versus the moment that you exit, there's very little time between those trades. Oftentimes I see people saying, oh, I'm scalping, but they're trading 4-hour charts, or they're trading 2-hour charts, maybe 1-hour charts. And that's not to say that you can't enter the position, price moves within 5 to 10 minutes, and then you get out and it's not a scalp. It is for sure a scalp, but typically speaking, most people who scalp trade lower time frames in the 5 to the 15 minute, maybe even the 1 minute, depending on your execution software, depending on your trade strategies, depending on the asset class. So how I would define scalps, and there's a lot of online definitions for this one, so bear with me here, but they're essentially short-term trades within the 1 to 15 minute time frames that look to abuse volatile market conditions. So I'm going to go ahead and write that down. They are low time frame trades that look to abuse volatile market conditions, typically the 1 to 15 minute candle, and should almost always be under 1 hour within the trade. What that means is the time that you enter a trade to the time that you exit at most should be an hour. Anything above that I would just consider an intraday trade, and that's a totally different topic altogether. That's like the people who trade on the hourly time frames, and then there's obviously 24 candles of that in a day. That's an intraday. But a scalp is typically marked by the quickness of you moving in and out. Key assessments for what you should be anticipating when you're looking to scalp is the assumption that you are not looking to ride a medium time frame trend. if you enter, say, right here, 27.9, because you see that price is failing right here. You see this sweep below, maybe you enter right here. You're probably targeting right around these highs, so around 28.2. You are not targeting like up here. You're not saying, okay, well, we're probably gonna go from here all the way up to these highs, or even right here to 29.5, right? That's more of a intraday slash, multi-day trade, but maybe not even a swing trade, right? And that's that gray area that most people struggle with because they can't identify which side of the coin that they want to be on. So many people make this mistake, especially newer traders, where maybe they're really good at figuring out what price is gonna do within the next 5 minutes, 10 minutes, 30 minutes. And they're really bad at figuring out what price is gonna do 3 days from now, 2 days from now, or even a day from now. But they murky the waters a little bit because they go on the 4 hour, and now suddenly this trade could end within a day, or it could end in 2, or it could end in 5. So it's very essential, and I know it's boring, it's not a fun topic, but it's very important that you identify what is a scalp and what is a swing trade and what is everything in between, because you need to know which path you are taking when you're taking a trade. Okay, so now that we've generally defined what's a scalp, what's a swing, and everything else in between, which trading style is better for newer traders? And there's going to be a lot of conflicting answers because one, everyone's different. So if you are looking to be a full-time trader, this video is for you. So if you're not looking to be a serious trader, you're not looking to, devote a significant amount of time towards trading, you're not looking to potentially just leave your job or whatever, trading is just a hobby, just a side hustle, just a little investment for you, feel free to be a swing trader. Feel free to be an investor. And whatever you do, just don't be a scalper. The video for all the serious traders is that scalping is king. Scalping is king, and I'll tell you why. The reason scalping is king is because you're able to quickly define your risk and you're able to avoid tail risks such as these. And this isn't, a definitive list of everything that could happen, but this is definitely possibilities that we've seen happen in the last year. The second reason why scalping is significantly better than swing trading is if you are a serious trader, or you are a person who wants to be a full-time trader, you obviously need a working trade strategy. You have to have experience in the market. You have to put the time in. And it's very difficult to rack up experience when you're trading on a swing basis, right? Where you're trading maybe a couple times every few weeks, maybe. Compare that to someone who scalps. You're gonna have one trade right here, and then maybe you'll have another trade right here, and then you'll have another trade right here, and then maybe you'll short this, maybe it'll go back to your entry, whatever. But the point being is that you're gonna have 10, 20, 30, 40, 50, 100 trades for every time a swing trader gets 1 or 2 or 3 trades, right? So over time, by the time a swing trader has maybe 50 trades, where they have 50 patterns to look at, 50, market structures to identify, you would have had hundreds, if not thousands, of trades under your belt. You would have felt the highs, the lows, the disappointment, knowing how to work a stop loss, figuring out the errors in your trading philosophies and your trading strategies much quicker. Now that I've kind of mentioned all the positives of scalping, it's only right that I give you the downsides as well. The downsides are that, well, you depend on volatility. That was one of our key assumptions and definitions of scalping, where you are looking to kind of abuse volatile market conditions. So when conditions are not volatile, guess what? You might not have many trades, if any. But fortunately, you're in crypto, a 24/7 market where volatility is the name of the game, where coins will move 40, 50, 60% a month. Bitcoin might move 20%, and then your favorite altcoin might move 40. So there's no lack of volatility in these markets, which is why I truly believe that if you are a aspiring crypto trader who's trying to seriously grow and learn from the markets and try to be a full-time profitable trader, the best strategies to employ involve scalping. So that should be the fundamental foundation that you build your trading strategies off of initially. Is there a time and place for swing trading? Of course. Of course, and there's no rule that says you can't do both, but I would highly recommend that newer traders looking to improve do the scalping. Do the scalping method, get your ass handed to you a couple times, and figure out all the kinks, all the things that you need to tweak in your trading strategy and become better. And one last take-home message that I want you guys to really understand is that the reason we broke down what scalping is, what swing trading is, what obviously a longer term investment is, right? Maybe months or years, and everything in between I would argue as intraday, intra-week. And that way you understand that scalping is not always intraday trading. So if you are sticking to scalping or you are sticking to intraday trading, make sure all your trades fit those parameters at least in the beginning. Just like if you were learning a new sport, you wouldn't learn the sport by learning every single skill all at once. You would learn how to dribble the basketball first, or maybe you would learn how to hold the tennis racket, or you would learn how to properly wrap your hands if you're boxing. So we learn individual skills at a singular time. So it's very important to identify what markers we're looking for, what parameters need to be reached, and then we stick to that to improve our chances of being a successful trader. So that will wrap up this video. I will have a separate video for scalping strategies, but this is just to define what that is, why it's better, the pros and cons of both forms of trading. Thank you guys as always for tuning in. If you haven't, hit that subscribe button, like the video, comment underneath, tell me what the fuck you guys like, or tell me what you guys don't like. I'm open ears, I'm ready, and yeah, I'll catch you guys next time.